all that has happened so far, a bruising year for tariff brinkmanship. India and the US now have finally sealed a trade deal. The headline number is hard to miss. Reciprocal US tariffs on Indian goods dropping to 18% from 25% earlier, and from as high as 50% during the flare-up that happened earlier last year. But the announcement followed a phone call between President Trump and Prime Minister Modi, both leaders hailing it as an immediate reset of ties. And there is also the energy subplot. Washington claims that New Delhi has agreed to halt Russian crude purchases and step up American energy buys, potentially Venezuela too. And that is part of the thaw, at least that's the American version. Details and sequencing is going to matter in the fine print eventually. But the question is, how have we cracked this right now, this deal, the timing? In the last 12 months, India has reeled off a run of trade pacts. The United Kingdom, Oman, New Zealand, European Union just days ago, and now the US. So many in Delhi and Washington DC are saying that the EU FTA, the mother of all deals, has helped unlock Washington to close this deal. Net-net, India is repricing its place in global trade. The markets have voted with their wallets today. The rupee has logged its best session in years. The equities have ripped higher. Tariff uncertainty is cleared now. So even as analysts are cautioning that execution and the fine text of this deal are going to matter, the markets are on a tear. On the ground, who stands to gain? We've spoken about these. Early winners include textiles and apparel. Besides seafood, auto ancillaries, chemicals, gems and jewelry, where price competitiveness in the US market improves immediately. But here is the caveat as well. Section 232 duties on steel, on aluminium and some auto parts, they can still bite at 25 to 50%, even after today's handshake that we are talking about. So the bottom line is that a strategic de-escalation with America, a trade competitiveness nudge against regional peers, and a sentiment reset for the Dalal Street and the Indian currency. So now the big questions are about durability and deliverables and downstream effects on energy security for one, also the export orders as they come through. So we've asked India Inc. what this really means in the trenches. Fabrics, fine chemicals, all of them. Listen to what they've told us just before we set off this debate with our panelists who are joining us on the big question.
India and America are extremely aligned, and I think this shows the strength of that alliance partnership and puts us back in the right context, in a stronger position to grow our business. So I think this is good news. It puts a lot of clarity and it takes away any overhang that one may have.
Who are importing from India were subject to pay this additional 25% of penalty tariff, and compared to our competition who are mainly in 19 to 20% range, we were paying a reciprocal tariff of 25%. So that will give almost a differential of 30% higher tariff if the goods are going from India. With this announcement of last night, definitely that takes it off. In fact, it gives India an advantage of 2% compared to the competition of Bangladesh, Cambodia, Vietnam, Indonesia, these kind of countries.
See, there's no limit now because, the opportunities are very high. See, now we signed the agreement with the EU, European Union. That itself, I don't think, we can take 10% of that demand. So now with the US agreement, the opportunity is going to be, sky is the limit. There's no limit. Anybody invest on the garment sector, now this is the best time.
This was something that the industry long awaited, and it's a huge positive for the country and for the sector in general. US accounts for $6 billion worth of chemical exports from India. It's roughly 20% of country's total chemical exports. So on that, bringing tariff down all the way from 50+% to 18%, I think gives a lot of relief plus a lot of certainty. I think a lot of decisions around growth, capex were kind of in a holding pattern mode over the course of last 9 months. And I think this deal will give a huge push towards that. So very positive for the sector.
So the industry voices are saying it, that now we are seeing that much more certainty. When you talk about the American deal that the Indians were striving for, that was in the balance, now we are getting some clarity on it. Yes, more clarity is required, but at this point, now that we have a trade deal, a lot of that uncertainty goes out of the window. It also begs the big question that we are asking today. now that we've got some 5 deals going in the last 12 months, including the deal with the US, does this mean that our place in the global trade order is changing? Which is why we're asking, has India changed its place in global trade? And for that, we have an excellent panel to discuss this with. Let me introduce you to them. Well, we've got Chandrakant Salunke with us, President of the SME Chamber of India and India-US SME Business Council. Pradeep Mehta is also with us, Secretary General at Cuts International. He's NGO Advisor to the Director General at the WTO. S.E. Ralan with us, President of the Federation of Indian Export Organizations, the FIEO. Anubhuti Sahai is with us, Head of South Asia Economics Research at Standard Chartered Bank. And David Roche is here, Global Strategist at Quantum Strategy. Gentlemen, thank you very much for making the time. Chandrakant Salunke, first to you. With these American tariffs on Indian goods now cut to 18%, of course, from 50 and 25%, but what's the one immediate barrier that you see that SMEs are still going to face to convert this relief into firmed up American orders? Whether it's to do with compliance or logistics or working capital, where do you see the problem here?
The problem will not be much there because we have been supplying or exporting to the US market, and most of the exporters are aware about the their rules, regulations, hurdles, and compliances, and all the performance basis. Particularly now, this is a good time to learn more about it because the Trump administration have been defining and calculating the ecosystem for the imports. So therefore there will be some little bit hurdles will be there, but nevertheless Indian entrepreneurs, Indian exporters are very well knowledgeable, very well equipped with the knowledge and services, and of course our government of India, particularly Commerce Ministry, is behind our entrepreneurs and exporters to educate them, support them, provide hand-holding. You must be seen that last 1 year, everybody was under the pressure, and therefore the government started finding the new emerging market. And therefore, that is the outcome for the tariff imposed by the Honorable President Mr. Trump on India. That's why we had gone for the instantly various deals with the various countries. FTAs is signed, the mother of deal with the European Union. That is the initiative taken by the government, and rightly taken because we have to achieve the Viksit Bharat. Without Indian SME, without manufacturers, and without exporters, it will not be done. So I'm sure that whatever the mention you are mentioning, the picture you're showing with the Mr. Modi and Trump, ye dosti nibhayenge. So I'm sure that they will, particularly follow the friendship between both of them, both the leaders, and to provide a level playing field for the Indian industries, Indian SME sector, Indian exporters.
So you sound very confident. Let me take that across to Mr. Ralan, because as far as crude oil is concerned, we don't have clarity yet. And this, what we've heard from the American side, is only about halting Russian crude and stepping up the energy buys from the American side or the Venezuelan side, which is what we got from Mr. Trump when he put out that first tweet. How do you think India is going to make that transition? Do you see that as an easy process? Do you think that we could have got a good deal on the oil front as well, where we hold our ground?
I think Trump must be satisfied with whatever we are buying from Russia. That's why he declared such a big announcement. Yes, I agree. A lot of things are yet to be looked into. After the executive order, what are the rules and regulations? What are the other issues? That's the executive order is very, very important. That's what we are waiting. But as far as the Russian oil is concerned, I think it is very nominal. I don't cover that basically, but I think the Trump should be satisfied by whatever we are buying from Russia. There should not be any problem.
I'm just getting breaking news on the channel, so let me just apprise you of what I'm hearing right now, that India may get some concession under Section 232 is what I'm picking up. So Section 232, of course, includes steel, aluminium and copper. The US Section 232 duties, they remain around 50%. Some auto components as well, tariffs might still be 25% or around that much is what I'm picking up. Mr. Sajjanhar, so as these details come through, because the clarification hasn't come through, And we are looking at more and more speculation that's taking place on how exactly the deal structure is going to be. Of course, there is going to be a joint statement, but tell us, in your understanding and experience, when we talk about Section 232 and India may get some concessions under it, but there could be some exclusions as well. When you talk about steel and aluminium and copper, these are quite crucial, wouldn't you say?
Yeah, thank you very much, Vikram. Yes, you're very right. These are very critical, and we have had suffered this pressure from the United States even during Trump 1.0. So, we are quite familiar with what this can entail. But then, even in the last term, we were able to, overcome these issues, and we were able to maintain and retain our exports of steel, aluminium, etc., etc. But if you permit, if I could, just come in on the question that you had raised about the energy security and India's purchase of oil from United States and Venezuela and Russia. So, first, as far as Venezuela is concerned, we have always been buying oil from Venezuela. We have refineries in India which are, capable of dealing with the heavy crude that comes from Venezuela. Not very many refineries in the world are equipped to deal with that. We are able to, and that is why, we were buying oil from there. Of course, the quantities were not all that large, not only because of the sanctions that were imposed, but also because the production of oil by Venezuela, because its infrastructure is not very well developed, it couldn't, bring up so much of oil that we could pick up from there. Now, of course, there are investments. If the production increases, then India would definitely be in the market. As far as the United States is concerned, you would recall that even in Trump 1.0, we had considerably, significantly increased our offtake of LNG and oil, shale oil from the United States. And even in the first few months when Mr. Trump came to power, we have been increasing that. We are at the moment importing our energy from 41 countries. So, whatever energy we get about 85% of our oil, 45% of our gas from different, from importing sources. So whatever we are able to get from the United States, from Venezuela, we'll be able to deal with that. And also, as far as Russia is concerned, I'm sure, companies which are under sanction, for instance, Rosneft and Lukoil, that, of course, our companies will not go to them. But otherwise, whatever else is available, and depending upon the pricing and depending upon the quality of oil, I'm sure we will continue to buy oil from there. Maybe the quantities might come down. I think in December we were importing about 35% of the oil exported by Russia,
Yes.
and it might come down depending upon global circumstances.
Right. So, I mean, of course, from the American side, we've heard that there could be a complete stoppage as well. Now, how much that is part of the deal, that we've heard from the American side, but no clarity from the Indian side yet. But talking about oil, we have to talk about the impact on the Indian currency as well. Anubhuti Sahai, perhaps you can tell us, the rupee has logged its best session today in years. Equities have, of course, ripped higher after the announcement took place. But what's your 3-month base case for INR now and bond yields if this tariff clarity is going to sustain? And assuming that the RBI is going to lean against excessive appreciation, how do you think this is going to play out on the Indian currency, which faced a lot of volatility at one level, but also a lot of depreciation? And many of the factors that many have been talked about is because there was no clarity on an American deal, a trade deal with them.
Sure. If you look at the whole this whole development, this is definitely a big positive. Clear skies for the currency, which has been under pressure on a host of factors. But I would say that in the last couple of months, a lot of pressure was coming on the negative sentiment as trade deal was not been finalized. So it is definitely a big positive. Let me break down our view on rupee from a short-term perspective and a medium-term perspective. Over next couple of months, that is by March end, our view is that there is further room for rupee to appreciate, probably towards 89 or 89.50. This is on back of one, trade deal announcement. Second, this is also a quarter where we have a positive seasonality, which effectively means that we export a lot better than what we import. And as a result, our trade deficit is one of the narrowest in this quarter. In fact, this is a quarter where we have also seen trade surpluses. So these two factors put together is clearly likely to push rupee to a stronger level. And while we expect the Reserve Bank of India to collect dollars in order to boost its FX reserves, we think they will be okay to allow two-way volatility and allow rupee to appreciate, because two-way volatility helps in the appropriate hedging behavior. From a medium-term perspective, when we say medium-term, let me put a quarter. So for December 26 end, our forecast is for 93 rupees. And it is primarily coming on back of a few factors. One, we have a view that dollar either would be slightly stronger or would trade sideways. Secondly, we are little concerned about the FDI flows, which have plunged a lot, primarily because of outflows. Gross inflows still continue. And this trade deal, while being a positive, is unlikely to turn them around back towards, say, an average of $20-25 billion, and definitely far away from the $40 billion peak, which we saw at the end of March 2020. And the pressure on rupee, the pressure on net dollar inflows is likely to remain, while next 12 months we should see a positive dollar inflows versus 2 successive years of negative inflows. We think the pressure on rupee to weaken from a medium-term perspective still remains, but far more contained than what we have seen in the past couple of months. From rates market perspective,
I'll just come to you about the rates market, but David Roche, since we're running out of time as well, I just wanted to ask you, considering how the Indian rupee is moving, considering Anubhuti is also talking about the pullout of FDIs. As far as FIIs are concerned, we've seen that happen over a period of time. And yet we are wondering whether India is in a more commanding position to get what it wants in trade deals. Yes, relative to Vietnam, around 20%, Bangladesh, around that much. India now is sitting at 18% when you talk about this trade deal with the US. So now it's about the durability of this competitiveness window. If the US is recalibrating us against the others, where do supply chains actually shift in 2026? How much of that is going to be coming to India, which is going to have a ripple effect on our economy in the way our currency behaves as well?
Wow. Well, I mean, that is one hell of a question. I'll give you my answer. I think the level at which we are told Indian tariffs, US tariffs on India are going to settle, compared to places like Bangladesh, Vietnam, which you showed on your screen a little while ago, I don't think that is enough to lead to a reallocation of supply chains towards India. I think India is picking up supply, factories, etc., because it is making progress as a production center. But I don't think this is going to be tariff driven. So I would say don't bet too much on that. I think obviously the tariffs are good news. It would be very foolish to say they're bad news if they come down. But you do have to remember that there are two things out there that can influence things. Number one, the transactional approach to international relations and economics and geopolitics has not gone away.
Right.
And you can see further disruptions from further places. The second thing is, don't forget that all is not well in the United States. Yes, it's a nice place for you to sell your products, and I'm sure it'll go very well. But I would say that the volatility of things in the US could get much worse this year and quite possibly lead ultimately to a recession, which then works back through your new competitiveness in terms of the market to which you're selling not doing very well.
Right. No, that's a fair point. But in that sense, have we kind of decided that we are not going to put all our eggs in one basket? The EU FTA is one part of that story. Ashok Sajanhar.
Look,
you were saying?
You've been doing that for the last 2 years, and it's very clever. You should not fall into the honey trap of any single global hegemon. And you should keep doing that, because as you can see today, it pays.
It does.
So carry on.
It does. Mr. Sajjanha, do you agree with the EU FTA? We've closed it just days ago. But now one wonders till what extent has that catalyzed Washington's urgency right now? But also, how should India leverage rule-making with the Europeans to hardwire better discipline from the Americans as well? Is that something that India can now do?
No, definitely. I think that would definitely have acted as a very strong trigger that, that we've been able to have this deal with, known as the mother of all deals, with such a large entity, 21, $22 trillion, and 4, 5, the fastest growing major economy in the world. So both of them have come together. I'm sure this, and also maybe some of the other factors with the visits of Mark Carney and Keir Starmer to China. So maybe the United States is feeling that it is losing out on leverage which it thought it had. So maybe it had to come together. And I think this basic content of this deal, the substantive content of the deal, Vikram, in my view, was settled in sometime in July. I don't think any significant change has taken place in the contours, in the structure of what has been shared between the two sides. What are the gives and what are the takes on the two sides? So I don't think that is Mr. Trump, for his own reasons, and this is not the time to go into those. And he was, trying to apply that pressure. That has not worked, and so he has thought it fit. But India is in a sweet spot, I would say, at this moment. Having signed both with the United States, with the EU, with UK, and with a host of other countries. But what it really needs to do is increase its competitiveness domestically. I think that is in terms of the structural reforms that are required domestically. We can, of course, engage with the outside partners to get better terms. But what is really required is to have all the reform processes that are needed, fasten them, expedite them, take them forward so that we become more competitive going forward.
Well, that remains to be seen how competitive we are going to be. But today we saw the markets were on a tear. If the tariff relief persists, Anubhuti Sahai, do you expect the current account deficit to narrow through stronger exports, or do you think it'll widen through capital goods imports for capex? What's your FY27 balance of payments marker to watch if flows are going to re-enter India now?
So for FY27, our current account deficit forecast is in the range of 0.6 to 0.9% of GDP. So over past couple of years, current account deficit has remained very well contained, and on back of this trade deal, assuming it gets effective immediately, we need to know the timeline when it becomes effective. Initially, there can be some widening in or the trade balance or the trade surplus with US can actually widen in the first round because we are a higher tariff economy. Exports can improve, but if US goods are tariffed at 0%, then we can also see more imports coming from the US. Plus, if what US is saying is right and we switch completely out of Russian oil to the US oil, there can be some impact on the overall import bill. But all said and done, even if there is some adverse play out on the trade deficit front, the services exports are doing exceedingly well. And therefore, the current account deficit, even in the worst case scenario, is looking in control. So less than 1% of GDP. Balance of payment, we have seen 2 successive years of balance of payment deficit. And with this trade deal in place, our sense is we have now taken out the risk of a negative balance of payment story for which would have played out in the third year. So the balance of payment surplus can be in the range of $5 to $15 billion, depending on how much FPI flows should come in. It should be positive, but we need to see the delta. FDIs, as we highlighted, we remain cautious. So therefore, $10-12 billion of FDI flows. But net-net, a big switch from a deficit year to a surplus year from a balance of payment perspective.
So the forces that are shaping India's trade dynamics, also the resilience of our SMEs, the shifting global economic center of gravity, and the policy guardrails, we'll need all of that in the months to come. The insights here remind us that India's economic story is not playing out in isolation right now. It is being written in the boardrooms, on factory floors as well, and across the negotiating tables, also within the wider global realignment that we are watching and tracking so closely. The choices that we are going to make now are going to redefine what we understand as competitiveness, and that is something that is going to last for years to come. A big thank you to all our guests. Mr. Salunke, Mr. Alan was with us, and of course, we have Anubhuti Sahai, David Roche, Mr. Sajjan Har. Thank you very much for your insights and perspectives on this edition of The Big Question. And that's a big question tonight, even as we discuss India-US trade deal threadbare. As we get in more details, we heard the big words coming in from Piyush Goyal as well, the Commerce Minister. A joint statement is expected. How soon? That remains a big question as well. But we are tracking this from every nook and every corner. You can rely on us on NDTV Profit. But for the moment, on The Big Question, I'm Vikram Oza. From me and the team, thank you. Good evening.